Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 October-November Paper 1-2. This is Paper 1-2, which is the paper for multiple choice questions. We will have 30 questions. Each of them will be of 1 mark, and the total time limit for this paper is 1 hour. And in this case as well, we'll be attempting to complete this paper within 1 hour. So without any further delay, let's get started. For the first question, a business sells computers. When it values its inventory, it excludes the value of the inventory that is more than 1 year old. This is because it may be obsolete. So obsolete inventories are not included while calculating the value for the total inventory to be put into our financial statements. Which accounting principle does this demonstrate? So this is quite simple. If we are not including the value of inventory, it means that the total of the inventory will be lower. So it avoids overstating the inventory, which is part of our current assets. And that is stated by the prudence concept. Prudence concept states that assets and profits should not be overstated. So our answer in this case is just going to be option C. That's all for the first question. Let's move towards the second one. A purchases ledger clerk has to use a password to access the ledger in a computerized accounting system. What is the purpose of the password? To limit access to the purchases ledger by others. That is true. Only those people who will have access to the password can come and look at the ledger while operating in a computerized accounting system. So that will be part of our purpose of keeping the password. Then to prevent the clerk accidentally deleting a supplier's account. We know that the clerk has a password, so the clerk can access the ledger anytime that the clerk wants. And sometimes, since we are all human, they can accidentally delete some sort of accounts. So having a password will not prevent accidentally deleting a supplier's account. So this is not a purpose. For the third one, to stop the clerk recording a fraudulent or unauthorized invoice. Remember, the clerk has the password, so he can do whatever he wants to the ledger accounts at any point of time. So again, password will not stop the clerk recording a fraudulent or unauthorized invoice. So this is also incorrect. The correct answer we're looking for should only include 1, which is given by option B. That's all for the second question. Let's move towards the third one. Peter is a credit customer of John. He settles his account of 200. He pays by check and receives a cash discount of 5%. 5% of this amount will be the cash discount. So that will be 200 times 5%, which gives the amount of 10. It means that out of 200, he received a discount of 10. So the only amount he will be paying is of 190. Which entries are made in John's book of account to record this transaction? Okay, Peter is a credit customer. So Peter is the customer in this case and John is the supplier. And we're talking about the supplier's books of accounts. So in this case, the supplier will be receiving this money of 190. Whatever comes in will be recorded on the debit side. And in this case, 190 will be coming into our bank account. And we can look at it from another perspective as well. Since John will be receiving this 190 within his bank account, the balance on his bank account will increase. And remember, bank is a part of our asset. Any increments in assets should be recorded on our debit side. So bank 190, we want it on the debit side, which is given by option A and option B. Then this 10 will be the discount allowed, because we are looking at this transaction from the supplier's perspective, and supplier is allowing the discount in this case. Discount allowed is always part of our expenditure. And in this case, the expenditure will increase by a total of 10. And increases in expenditure will always be recorded on the debit side. So we want discount allowed of 10 on the debit side as well. And that is only given by option A. Then the total of 200 is being settled by Peter. So that will be recorded on the credit side. Right here. And in total, the correct answer is given by option A. So that is all for the third question. Let's move towards the next one. For the fourth one, which item is a capital income? Capital income means that it is a receipt not from our trading activities. So these are the income from non-trading activities. Okay, the first one is our bank interest received. And another way to look at the capital income is its nature. It will be non-recurring in nature. It means that it's an activity which will not occur frequently. But in this case, bank interest will be usually given after every 3 months. So that is quite frequent. So this is not the answer we're looking for. Second one is the proceeds from sale of business premises. Business premise is part of our non-current asset. Selling of non-current asset is not a frequent activity for any business because it will only sell once it will be no longer of use within our company. So this is the answer we're looking for in this case because it matches both of the criteria. This is a non-trading activity because the major income source of any business is trading or selling the goods. And in this case, we're talking about selling a non-current asset. So that is completely different, which falls under non-trading activities and its nature, non-recurring. We do not sell non-current assets frequently. It means that the correct answer we're looking for is option B. That's all for the fourth part. Let's move towards the fifth question. The draft profit for the year of a business is 53,000. During the year, the business acquired new premises and included the following costs in the cost of the premises. So we included the legal fees and insurance. Always remember that while including the cost of the non-current asset, we only include the capital expenditure. And the nature of capital expenditure is non-recurring. It means that it will not occur very frequently. So the first one we have is legal fees. Legal fees will only have to be paid once while we are acquiring the new premises. So this should be included. Then we have insurance. Remember, we have to pay the insurance premium every year. So it occurs quite frequently, which is not a part of our capital expenditure. So this should not have been included. The business does not charge any depreciation on premises. What is the revised profit for the year? Remember, previously, this is part of our revenue expenditure, but it was treated to be a capital expenditure. And remember, capital expenditure is added to the cost of the non-current asset, whereas revenue expenditure is shown as expenses within our statement of profit or loss. So since this was previously not recorded, our expenditure was understated. And as a result, the profit was overstated. Now the profit will be reduced, right? And previously the profit was 53,000. Now we also have to subtract the insurance of 4,500 because this is part of the expenditure which will reduce our profit. This gives us the value of 48,500. So this is the revised profit we are looking for, which is given by option B. That's all for the fifth question. Let's move towards the sixth one. Non-current assets can be depreciated using a number of methods. How is the most appropriate method decided? Remember, we apply depreciation in order to comply with the matching concept. What matching concept states is that we need to match the revenue of the period to the expenditure of the period. Depreciation is just the expenditure that we use of the total non-current assets during that particular year. So in order to choose the most appropriate method for depreciation, we need one which will reflect the pattern of use of the non-current assets. If we are talking about motor vehicles, those are the kind of non-current asset that will lose higher values in earlier years and lower values in later years. So in such cases, a reducing balance method would be more appropriate. But in case of maybe premises, the value will deteriorate in the same level over time. So maybe in such cases, straight line method would be more appropriate. So that is the method we need. It needs to reflect the correct pattern of use of those non-current assets, and that is given by option D. That is all for the sixth question. Let's move towards the seventh one. Ryan purchased a van for 16,000 on 31st December 2021. It is his policy to apply 25% per annum, reducing balance depreciation for each part of the year the asset is held. Ryan traded the van in 1st July 2024 for a 6,150 reduction on the cost of a new van. So while purchasing new van, he did not have to pay this amount because this was settled by the sale of the existing van. So this is our sales proceeds. Now, what was the profit or loss made on the disposal of the van? Whenever we are trying to calculate the profit or loss on disposal, we need to compare the sales proceeds to the net book value. And the formula for net book value is cost minus accumulated depreciation. In this case, the cost of the van is 16,000. We have that part, but we do not have the accumulated depreciation. So that is what we need to calculate. Okay, let's create a timeline. It was purchased on 31st December 2021. So this is 31st December 2022, 31st December 2023, and 31st December 2024. Okay, it was purchased at this date and it was disposed at the date of 1st July 2024. So somewhere around here, 1st July 2024. We have been told that we need to apply depreciation for each part of the year the asset is held. So we need to charge it on a monthly basis. So we need to count the month for this period because for these two, we are using the vehicle for the entire year. But for this third year, we only use it for the months of January, February, March, April, May, and June. So that will give us 6 months. And again, in this case, the method we are using is the reducing balance method. So we need to calculate depreciation separately for each year. So for the first year, for this time period, it is just going to be cost times rate. So 16,000 times 25%, which results in a value of 4,000. Then for the second year, first year's depreciation will act as the accumulated depreciation, and in this case we are using the reducing balance method. So the formula will be cost minus accumulated depreciation times rate. So 16,000, now this is our accumulated depreciation, minus 4,000 times 25%. This results in a value of 3,000. Now for the third year, depreciation on both first years and the second year will act as our accumulated depreciation. So 16,000 minus 4,000 minus 3,000 times 25%. But this will give us the depreciation charge for the entire year, and we only want it for 6 months. So times 6 by 12. This results in the value of 1125. Accumulated depreciation is just the total depreciation from the date of purchase to the date of disposal. So that will be the sum of these three values. So that will be 4,000 plus 3,000 plus 1125. This results in the value of 8,125. So we have the accumulated depreciation now. Now the net book value will be 16,000 minus 8,125, which results in 7,875. So this is the value that we record within our books of accounts, but it was only sold for 6,150. So we got less value than what we anticipated for, which means that there is a loss on disposal, and this loss will just be the difference between the sales proceeds and the net book value. So 7,875 minus the sales proceeds of 6,150. This results in the value of 1,725. So we're looking for 1,725 loss, and that is given by option B. That's the answer for question 7. Let's move towards the 8th question. Now, the totals of the trial balance of a business did not agree. The following errors were discovered. After the appropriate corrections were made, the trial balance totals agreed. What was the difference between the trial balance totals before the corrections were made? So difference is just going to be the opening balance within our suspense account. Okay, let us correct these errors. The wages account had been overcast by 550. If something is being overcast, then we need to reduce its value. In order to reduce it, we just need to enter it on the opposite side while creating journal. Remember that wages is an expenditure which should be recorded on the debit side. But since it is overcast, we need to record it on the opposite side. So we'll have wages on the credit side, 550. And that is the only correcting entry. It means that the debit entry will be suspense with 550. Now for the second error, the sales account had been undercast by 400. If something is being undercast, it means that we need to add its value on the correct side. We're talking about sales, which is a part of our income, so it should be recorded on the credit side. So on the credit side, we'll have sales with 400, and that is the only correcting entry, which means that on the debit side, we'll have suspense. Now for the third one, a credit sale of 150 had been recorded on the sales invoice as 510. Remember, this is not the error within our journal. This is the error within the sales invoice. So it will have no impact within our trial balance. So we can just completely ignore this error. Now we need to prepare a suspense account. So we'll just do it roughly here. For the first journal entry, we can see that the suspense account is on the debit side, which means that we need to post wages on the debit side within the suspense account. Then for the second journal entry, again we can see that suspense is on the debit side. It means that sales should be posted on the debit side. Now the opening balance will be on the credit side, because remember, suspense is a temporary account, so there should be no closing balance. Now the total from the debit side is 550 plus 400, which results in 950. And that will also act as the opening balance within the suspense account. Always remember that the opening balance within the suspense account is just going to be the difference between the trial balance totals before the corrections were made. So the answer we're looking for is 950, which is given by option D. That is all for the 8th question. Let's move towards the next one. In the books of a trader, discounts received of 1400 had been posted correctly in the suppliers accounts but debited in the discounts allowed account. What are the correcting entries? Okay, this error can be split into two different errors. This 1400 was actually for discounts received, but it was not recorded, which means that discounts received is understated. If something is understated, we just need to record it on its correct side. We're talking about discount received, which is an income. Incomes are always recorded on the credit side. So our discounts received should be on the credit side with the amount of 1400. Then the next error is that this 1400 discount received was incorrectly recorded as discount allowed. So discount allowed is overstated. If something is overstated, we need to reduce its value. And in order to reduce it, we just post it on the opposite side. We're talking about discount allowed, which is part of our expenditure. Expenditure should be correctly entered on the debit side. Now, since it is overstated, we need to enter it on the opposite side in order to reduce its value. So in this case, discount allowed will also be on the credit side, 1400. So these are the only correcting entries, which means that on the debit side we'll have suspense. And remember, the total within our journal entry, the debit and credit total should be the same. On credit side we have 1400 twice, so on the debit side we need to have 2800. So this is the correcting entry we are looking for. Suspense on the debit side, discounts allowed and discounts received on the credit side. In this case, that is given by option A, so that's the answer we're looking for. That is all for the 9th question. Let's move towards the 10th one. What are the advantages of preparing a bank reconciliation statement? The first one is it eliminates the risk of fraud in banking transactions. Remember that we prepare bank reconciliation statement only to adjust our unpresented checks and uncredited deposits. So there is no prevention of fraud in this case. So it means that this is not part of our advantage. Second one is it helps to identify errors in bank statements. That is true because while preparing our bank reconciliation statement, we start with our bank balance as per the cash book. It means that whatever transaction goes on within our bank account is also maintained within our cash book. So if there is any discrepancies between those two values, then we can identify the errors. So this is a part of our advantage. The third one is it helps to identify out-of-date checks. This is true because if there is any uncredited checks, then that will clearly be disclosed while preparing our bank reconciliation statement. So 3 is also correct. The answer we're looking for needs to have 2 and 3, and that is given by option D. That's all for the 10th question. Let's move towards the 11th one. The cash book of a business showed a debit bank balance of 3,900. This differed from the bank statement balance. The bank statement included bank charges of 250, a direct debit of 3,280, and a credit transfer of 300. None of these amounts had been entered in the cash book. A payment of 620 entered in the cash book had not yet been presented for payment. We need the balance on the updated cash book. Okay, so we're preparing the cash book in this case. Remember, within our cash book, we record all of our incomes or receipts on the debit side, all of the payments on the credit side. In this case, the cash book of a business showed a debit bank balance of 3,900. So we have our opening balance on the debit side. Then the bank statement included bank charges of 250, direct debit of 3,280, credit transfer of 300, and none of these amounts have been entered in the cash book. So now we just need to enter these 3 transactions. Bank charges is part of our expenses. It means that we are paying it to the bank. So it will go on the credit side. We have bank charges of 250. Then we have direct debit of 3,280. Remember that direct debit is a payment. So this is also part of the payments. It will go on the credit side. This is a direct debit. Then we have a credit transfer of 300. Credit transfer of 300 means that we are now receiving this 300 within our bank account. So that is part of the receipts. So it will go on the debit side. And this payment of 620 has already been entered within the cash book. So we do not need to make another entry for this one. So that is all. Now we just need to calculate our closing balance. And in this case, we can clearly see that the debit side is higher. So the closing balance will be on the credit side. Now we need the debit total. So that's 3,900 plus 300, which results in 4,200. And the closing balance is just going to be 4,200 minus 250 minus 3,280. This results in the value of 670. So that is the answer we're looking for, which is given by option B. That's all for the 11th question. Let's move towards the 12th one. Which items will be entered in the debit side of the purchases ledger control account? Remember, purchases ledger control account is the trade payables account, and this is part of the liability. So remember, for liabilities, all of the increases will be on the credit side, all of the decreases will be on the debit side. And we are looking for the debit side entries. So we just need to look for those factors which will decrease the value of trade payables. The first one is contra with sales ledger control account. Contra means that we no longer have to pay the money because the supplier is also a customer. So instead of paying back and forth, we are just cancelling the amount. That will definitely decrease our trade payables. So that's true. Second one is discount received. If we have received some sort of discount, it means that the amount that we have to pay will be reduced as well. So again, we are looking at reduction in trade payables, so that is true as well. Then we have returns inwards. Returns inwards is sales returns, and in this case we are talking about purchases ledger control account. So all of the transactions relevant to purchases will only be included within the purchases ledger control account. Since this is related to sales, this will not be included. So the correct answer we are looking for should include 1 and 2, which is given by option A. That's all for the 12th question. Let's move towards the 13th one. A company prepared a sales ledger control account. The balance did not agree with the total of the sales ledger balances, which were 42,650. The following errors or omissions were discovered. What was the correct total of the sales ledger balances? Okay, we only need to work for the sales ledger. Remember that sales ledger balances is prepared by looking at the individual supplier account. So any errors within the individual accounts will only impact the sales ledger balances. And sales ledger control account is prepared by looking at the book of prime entry. So if there are any errors within the books of prime entry, those will affect the sales ledger control account. And in this case, since we are trying to figure out the correct total of the sales ledger balances, we will only be concerned with the errors within the individual account. So we can start with the given balance, 42,650. Now for the first error, an irrecoverable debt of 500 in the general journal has not been recorded in the sales ledger. Remember, irrecoverable debt will now reduce the value of trade receivables. So since this was previously not recorded within the sales ledger, we now have to reduce 500. That's all for the first one. For the second one, the sales journal has been incorrectly added and must be reduced by 750. Remember that this is a journal. It means that this is part of book of prime entry, and this error will impact the sales ledger control account, not the sales ledger balances. So this is not relevant for now. The third one, sales ledger control account, includes the discount received of 400. It should have been discount allowed 600. Again, this is an error within the control account, not the sales ledger balances. So this is not relevant. Sales to J. Brown of 640 had not been entered in his account. Since it was not entered, it means that it had not been entered within our sales ledger balances as well. And whenever we are making sales on a credit basis, that will increase the value of our trade receivables. So we need to add this value of 640. That is all. Let's calculate the total. 42,650 minus 500 plus 640. This results in the value of 42,790. So this is the answer we're looking for, which is given by option D. That's all for the 13th question. Let's move towards the next one. The current assets of a company include the balances on both rent payable and rent receivable accounts. What do these balances represent? Remember that both rent payable and rent receivable is part of the current assets in this case. Current assets will refer to all of the receivables. Now, rent payable means that we've already paid for the rent of the future years as well, but we are yet to receive the services for it, because that would categorize it as receivables. So we've already paid for it but have not received the services yet. It means that this will act as our prepayment. Then we have rent receivable. Rent receivable just means that whatever rent had been incurred during the year, we are yet to receive it. So this will refer to the accrued rent income, because we are yet to receive it. So the answer we're looking for should include prepayment and accruals. That is given by option C. That's all for the 14th question. Let's move towards the next one. The following information is available for a sole trader. Allowance for irrecoverable debts at the start of the year is 1,400. Total trade receivables at the end of the year is 36,000. At the end of the year, it was decided to write off 1,000 as irrecoverable debts and maintain the allowance for irrecoverable debts at 3% of trade receivables. So the closing balance of allowance for irrecoverable debts, we just start with the closing trade receivables, 36,000, and before we multiply it by the rate for allowance, we need to write off the irrecoverable debts, because this amount will not be received and irrecoverable debt will always reduce the value of trade receivables. So we need to reduce it by 1,000. And then we can multiply it by the given rate of 3%. This results in the value of 1,050. That is our closing balance. Now, what is the entry in the allowance for irrecoverable debts account? Okay, in this case, we need to compare the closing balance to that of the opening balance. So opening balance is 1400, closing balance is 1050. If we were to prepare the allowance for irrecoverable debt account, since this is an allowance, it is part of our liability. We can consider it to be a liability account. So the opening balance will go on the credit side, closing balance will go on the debit side. In this case, since the closing balance is lower, it means that there is a decrease in allowance for irrecoverable debt. So we need a balancing figure right here. Now the total is 1400. And this balancing figure is just going to be 1400 minus 1050, which results in 350. So the answer we are looking for is just going to be 350 debit, which is given by option C. That's all for the 15th question. Let's move towards the next one. A sole trader's statement of profit or loss shows the following information. We have opening inventory, operating expenses, profit for the year. Closing inventory is 10% less than opening inventory. So closing inventory, we just need to reduce the value of opening inventory by 10%. So opening inventory times 1 minus 10%. That will be 5000 times 1 minus 10%, which results in the value of 4500. That is the closing inventory. Then all goods are marked up by 50%. We need to figure out the purchases for the year. Okay, so if we were to prepare our statement of profit or loss roughly, we have sales, cost of sales, then we get the gross profit. After gross profit, we subtract operating expenses, after which we get profit for the year. Profit for the year is 5400 in this case. Operating expenses is given to be 3000. Now we create an equation. Remember, gross profit minus 3000, which is the operating expenses, will give us the profit of 5400. So the gross profit in this case will just be 5400 plus 3000. This results in the value of 8400. Okay, then we have markup as well. Markup is just the profit applied to the cost. So in this case, we already have the profit. So how we can apply this 50% is that the cost of sales times 50% should be equal to the profit part, which is the gross profit. We're trying to calculate the cost of sales. So cost of sales will just be gross profit divided by 50%. Gross profit in this case is 8400. So 8400 divided by 50%. This results in the value of 16,800. Now we need to calculate the purchases. We can simply use the formula for cost of sales. Cost of sales is just opening inventory plus purchases minus closing inventory. In this case, we calculated the cost of sales to be 16,800. We have been given the value of opening inventory to be 5,000. We're trying to calculate the purchase, and we have calculated the closing inventory to be 4,500. So the purchase in this case is just going to be 16,800 minus 5,000 plus 4,500. This results in the value of 16,300. So the answer we're looking for is 16,300, which is given by option C. That's all for the 16th question. Let's move towards the next one. L and M are in partnership, sharing profits and losses in the ratio of 3:2. They have the following current account balances. Okay, balances at 31st March 2024 after taking into account the following. Alright, we have interest on drawings, interest on capital and drawings. What was the residual profit to be shared between L and M for the year ended 31st March 2024. Okay, we want the residual profit. That's the total residual profit. So maybe we can just create the current account for both L as well as M, and we can just do it roughly. So we have L, M, and L. So for the opening balances, L has a credit balance, so 3000 on the credit side, and M has a debit balance, 4500 on the debit side. Remember, within our current account, all of the increases will go on the credit side and all of the decreases will go on the debit side. We have interest on drawings. Interest on drawings is something that the partner will have to pay. So it will definitely decrease the current account balances. So this will have to be recorded on the debit side. So we have 1000 for L, 1500 for M. Then we have the interest on capital. Interest on capital is something that will be received by the partners from the partnership. So this will increase their current account balances. We need to record it on the credit side. So we have 3000 for L, 2000 for M. Then we have drawings. Again, drawings is something that the partners will have to pay to the partnership. So this will reduce their current account balances. We need to record it on the debit side. We have 10,000 and 15,000. Now, residual profit is something that will increase their capital balance. So the profit should be recorded on our credit side. We're trying to figure this out. This will act as the balancing figure. Now, for the closing balances, we have 14,200 credit for L. And in this case, the credit just means that it is a positive balance. So this is something that he has to receive. So the closing balance will be shown on the debit side, because this credit will be after it has been taken to the opposite side for the next period. So we have 14,200 on the credit, but this will act as the balance CD on the debit side. Then for M as well, we have 6,200 debit, but this will go on the credit side as the closing balance. Okay. Now, since we have the balancing figure on the credit side, we need the total from our debit side. For L, it will be 1,000 plus 10,000 plus 14,200, which will be 25,200. Now, the residual profit will just be 25,200 minus 3,000 minus 3,000. This results in 19,200. Now, for M, the total will be 4,500 plus 1,500 plus 15,000, which is 21,000. Now, the residual profit will just be 21,000 minus 6,200 minus 2,000, which results in 12,800. Now, we can calculate the total residual profit by adding these two together. So, we have 19,200 plus 12,800. This results in the value of 32,000. This is the answer we're looking for, which is given by option D. That is all for the 17th question. Let's move towards the next one. A company issued shares at a premium. In which financial statements would the share premium appear? So share premium will be shown within our statement of financial position, and it will also be shown within the statement of changes in equity. So these are the answer that we are looking for, and that is given by option A. That's all for the 18th question. Let's move towards the 19th one. The statement of financial position of a company at 31st December showed the following. We have the opening capital balance. During the following year, the company carried out the following. Okay, we need to figure out what was the amount of cash received by the company in respect of these transactions. For the first one, on 1st January, we made a rights issue of 1 ordinary share for every 5 ordinary shares held. So for every 5 ordinary shares we have, we will be giving out 1 rights share. And remember, whenever there is a rights issue, the existing shareholders will have to pay for it. It means that the company will receive cash due to this transaction. Let's calculate the number of rights shares. In order to do so, we need the number of ordinary shares we have before the rights issue, which is given right here, 200,000. So for 200,000 ordinary shares, we have to give 1 by 5 times 200,000 rights shares. That will be 40,000 rights shares. Okay, and the share issue price was 1.50 per ordinary share, and the issue was fully subscribed. It means that all 40,000 shares were bought by the existing shareholders at a price of 1.5. So the amount of cash that will be received by the company due to this transaction will be 40,000 times 1.5, which results in the value of 60,000. Okay. Then on 1st July, we made a bonus issue. Remember that whenever there is bonus issue, the company will have to use its own reserve in order to provide additional shares to the shareholders. So in this case, the existing shareholders will not be paying the company in order to buy these shares. So there will be no cash transactions during this bonus issue. And in this case, since we are calculating for the cash received, this bonus issue is irrelevant because we will not be receiving any sort of cash by making a bonus issue of shares. So the answer we are looking for should only include this 60,000, which is given by option B. That's all for the 19th question. Let's move towards the next one. Which ratio measures the efficiency of a business? So whenever you have been given ratios, those will be categorized. So we just need to look for efficiency ratios. And a trick to look for efficiency ratios is that it will have the word turnover. And in this case, we can see that the word turnover is present in the third option. So that is the answer we're looking for. That's all for the 20th question. Let's move towards the next one. A company's return on capital employed decreased to 10% in the current year from 15% in the previous year. The directors have noted the following changes during the year. Which changes could explain the decrease in the return on capital employed? Okay, first of all, we need to know the formula for return on capital employed. That is just going to be profit from operations divided by capital employed, which is just equity plus non-current liabilities, times 100. So if you want this total ratio to decrease, it means that either the numerator factor should decrease or the denominator factor should increase. So we're looking for these two scenarios. The first one is that a substantial investment in non-current assets were funded by new debentures. So we had additional new debentures. It means that the non-current liabilities will increase. And that is the criteria which matches to explain the decrease in the return on capital employed. So 1 is correct. The second one is that there was an increase in current liabilities. We can see that there is no involvement of current liabilities while calculating the return on capital employed. So this is incorrect. The third one is that the expenses to revenue ratio increased. Okay, so if the expenses is substantially higher as compared to the revenue, then it means that the profit will decrease if the expenses is higher. And in this case, we're talking about profit from operations decreasing. So this matches the criteria which could explain the decrease in the return on capital employed. So 3 is correct. For the fourth one, the rate of interest on the company's large overdraft increased. Remember that the rate of interest will not impact profit from operations, because once we calculate profit from operations, after that we subtract the finance cost in order to calculate the profit for the year. So this information will decrease the profit for the year, but it will have no impact on profit from operations. So this is incorrect. The answer we're looking for should include 1 and 3, and that is given by option B. That's all for the 21st question. Let's move towards the next one. A sole trader's cost of sales is 240,000. Gross profit margin is 20%. What are the sales for the year? Okay, so remember that if we have a gross profit margin, then we can just divide the revenue into two different parts. Our cost of sales and the gross profit. So gross profit margin just means that out of the total revenue, 20% is for the gross profit and the remaining percentage will be for the cost of sales, which in this case will be 80%. Now we can create equation from this information. We know that the cost of sales is just 80% of revenue. And we need to calculate sales in this case. We already have the cost of sales, we already have the margin, and we've already divided it so that the cost of sales will only represent 80% of the sales. So sales is just going to be cost of sales divided by 80%. Cost of sales is 240,000 divided by 80%. This results in the value of 300,000. So that is the sales we are looking for, and this is given by option C. That's all for the 22nd question. Let's move towards the next one. A business employs machinists to make a single type of product. As demand increases, more machinists are employed. Every time 8 extra machinists are employed, 1 extra supervisor is needed. Which option best describes total labor costs? Okay, for the machinist, we need to pay higher for every 1 additional machinist. It means that this is part of the variable cost, because if we make a graph, we have the number of machinists and we have the total variable cost. For 1 machinist, we might have to pay a certain dollar. For 2 machinists, we have to pay double. So it increases, right? So this will be part of the variable cost. Whereas for our supervisor, we only need 1 additional supervisor for 8 extra machinists. So for 8 machinists, we have 1. If it increases even by 1 unit, then we need additional machinists, right? And then again, if it exceeds 16 machinists, we need additional supervisors. So it keeps on increasing like this. And this is a graph for stepped cost. So the correct answer we're looking for will be variable for machinist and stepped for supervisor, which is given by option D. That's all for the 23rd question. Let's move towards the next one. The inventory movements of a business in a 3-month period are shown. It's for January, February and March. We have been given the receipts unit as well as the cost per unit and the issues unit. The business uses the first in, first out method of inventory valuation. What was the value of inventory at the end of March? Let's calculate the number of inventory at the end of March. Okay, at the beginning we had 100 units. Then we purchased additional 200 units. Then we used 50 units. So 50 units will decrease. Then we use 200 units. So 200 units will also decrease. So we have 50 remaining units. First in, first out means that whatever units we used was first taken out from the first batch which was purchased. So whenever we value inventory using first in first out, it will be valued at the latest price. Okay, in this case the latest price is 6 and this is for 200 units, which means that 50 remaining units were from this batch of 200 units. So the value of inventory is just going to be 50 times the latest price, which is 6. This gives the value of 300. That is the answer we're looking for, which is given by option D. That's all for the 24th question. Let's move towards the next one. A customer places an order for 20,000 bricks. Which costing method will the supplier use to price the order? And remember, bricks is something that will be same for every product. There will be no modification for a new brick. So we can produce it in batch. So the costing method that we are looking for is batch costing, which is given by option A. That's all for the 25th question. Let's move towards the next one. The following budgeted and actual information is available for overheads, labor hours, and machine hours. What would be the company's most suitable overheads absorption rate? Remember that overhead absorption rate is calculated based on the budgeted values. So we're looking for this column. This is irrelevant for now. And overhead absorption rate is calculated by using the formula budgeted fixed overheads divided by the hire of budgeted labor hours and budgeted machine hours. Okay, so in this case, the budgeted fixed overheads is right here, 460,000. So we need to divide it by the hire of the budgeted labor hour and budgeted machine hour. In this case, we can clearly see that the labor hour is higher. So we need to use 28,750. This gives us the value of 16. And this is based on the labor hour. So it will be 16 per labor hour. This is the answer we're looking for, which is given by option A. That's all for the 26th question. Let's move towards the next one. The following information is available from the costing records. We have the budgeted overhead cost, budgeted direct labor hours, actual overhead cost incurred, and the actual direct labor hours worked. By how much are the overheads overabsorbed or underabsorbed? The criteria for overabsorption is that the budgeted overheads absorbed will be higher than the actual overheads, and the criteria for underabsorption is that the budgeted overhead absorbed will be lower than the actual overheads. In this case, we already have the actual overhead of 34,000. Now we need to calculate the budgeted overhead absorbed. So this is just transforming the budgeted overheads cost so that it can reflect the actual direct labor hours instead of the budgeted direct labor hours. So this is 32,000. If we divide it by the budgeted direct labor hours of 4,000, this will give us the budgeted overhead per hour. Now we multiply it by the actual direct labor hours so that we get the total budgeted value but for the actual direct labor hours. So 3,900. This results in the value of 31,200. Now we need to compare these two values. We can see that the budgeted overhead absorbed is less than the actual overhead in this case, which matches the criteria for underabsorption. And the value for underabsorption is just going to be the difference between these two values. So 34,000 minus 31,200. This results in the value of 2,800. So the answer we're looking for is 2,800 underabsorbed, which is given by option C. That's all for the 27th question. Let's move towards the next one. Which items are included in the calculation of the contribution to sales ratio? So contribution to sales ratio is just contribution divided by sales, and contribution is sales and minus variable cost. So we're looking for two factors, sales and variable cost. So fixed cost is not required. We need the variable cost, we need the sales revenue, and sales volume is not really relevant because we could also use the per unit values. So the volume is irrelevant while calculating the contribution to sales ratio. So we need variable cost and sales revenue, which is given by option C. That's the answer. Let's move towards the next one. The financial information for selling 6,000 units in August was as follows. We have the per unit values for selling price, variable cost, fixed cost, and profit. Selling price was reduced by 10% in September. So the new selling price, we take the previous selling price of 40 and just reduce it by 10%. This results in the value of 36. Now, which level of sales was needed in September to achieve the same total profit as August? Okay, so we can just use the formula number of units. This is what we're trying to calculate in this case, the level of sales. If we multiply it by the contribution per unit, we get the total contribution. And in order to calculate profit, we need to subtract the fixed cost, and that will be the total fixed cost. So this will be equal to profit. Okay, we are trying to calculate the number of units. Let's calculate the contribution per unit. Contribution per unit is just going to be selling price minus the variable cost. The selling price for September is 36 and there is no change to the variable cost, so we can still use 22. This will give us the value of 14. Now we have the fixed cost per unit and this was for the 6,000 units. So the total fixed cost is just going to be the per unit value of 12 multiplied by the total number of units 6,000. This results in the value of 72,000. So we subtract the 72,000 and we needed the same total profit as August. The profit for August was 6 per unit. Now the total profit is just going to be the per unit value of 6 multiplied by the number of units of 6,000 for the month of August. This results in the value of 36,000. Now we just need to solve the equation. So the number of units is just going to be 36,000. This goes to the other side, so we have to add the 72,000. This goes to the other side as the denominator. So 36,000 plus 72,000 divided by 14. This results in the value of 7,714.29. And remember, whenever we are calculating the number of units, we always have to round it up. So it's going to be 7,715 units. That's the answer we're looking for, which is given by option C. That's all for the 29th question. Now for the last one, which statements correctly describe cost volume profit analysis? So cost volume profit analysis just means that we will be changing one of these three factors and looking at the impact on the remaining two factors. The first one is that it assumes a linear relationship between cost, revenue, and volume. This is true because we assume that the cost per unit, the selling price per unit will remain constant. And the volume is the same as well. So it will assume a linear relationship. And we can understand it better if we take a look at the graph. So if we are calculating the total cost, and this is our number of units. Sorry, this is the total cost and this is the number of units. Then it will be something like this. So as the number of unit increases, the total cost will also increase but linearly, since this is a straight line. And same goes for revenue as well. So the revenue will also be another linear line. So there is a linear relationship. Then it can be used in what-if analysis. That is true because, like I said before, cost volume profit analysis is just going to be changing one factor and looking at the impact on the remaining factors. Then the third one is it is a useful tool in long-term decision making. That is not true. Cost volume profit analysis is used for short-term decision making. Then for the fourth one, it shows how cost, revenue, and profit change in relation to sales volume. That is true. So the answer we're looking for should include 1, 2, and 4, which is given by option B. That's all for this paper. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.